Hello. Good evening. Let's see if we can get a few more people on. I tried to do this the correct way tonight. And guess what? Didn't work. Did not work. So let's see if people get notified. Because I tried. Hello, everybody. Let me know where you're from and have you read the book? That would be awesome. I'm sure I will see my favorite people back, our top fans, as Facebook likes to call them. You guys are here every week strong. I love it. Love it, love it, love it. Okay, I apologize for being a couple minutes late. I tried to be on time. I even tried to be early. Facebook didn't let me, and then they got stuck and it wouldn't start it. So if you can hear me, at least give me a thumbs up or something. That would be fantastic. Okay, woohoo, we got more tonight than last week. Winning, I'm gonna call that a win. All right, let's get started. What is going on for the week and who did I help and what did we do this week? It's been a short week for me and it feels like hey Kevin, thank you, glad you got notified, thank you. It has been a short week for me, even though we have like jam-packed clients in this week to try to open up the schedule a little bit. So it's been a lot of talking, Now, those of you who know me well know I like to talk, but sometimes it just is a bit much. Hey, Nate, you got in the house early. Hey, Matt. Getting the book is step one. That is step one. All right. We have had, let me just start the week out. First person I'm going to go over. This was kind of a fun phone call. He was a self-proclaimed Dave Ramsey fan, gone through the Dave Ramsey course. And those of you that have been following me for a long time know that I don't hate Dave Ramsey. Hate is a strong word, but I do not dislike every aspect of Dave Ramsey. There are certain things I don't love. But it's interesting because last week, if you recall, or the week before, you're all kind of jumbling together. We also had another Dave Ramsey fan who did not have the cash flow that he needed. And he didn't have a whole lot of debt, but he had some debt, didn't know how to pay it off, and I helped him work through that. Well, guess what? We have another fine gentleman like that. He cashed out all of his 401ks, any IRAs he had, and he's kind of had a little bit of bad luck, but he cashed all those out to get rid of all the debt. So he is 100% debt free, but guess what? Zero cash flow. Cannot start a policy because all the money that he did have, he cashed it out, paid off the debt. He has no liquid cash, none, zero, zilcho, nothing in savings, nothing in investments, no life insurance. Well, he has a little bit in savings, a tiny little bit. But had he known about this prior, we could have what? Taken the money from the investments, ran it through the policy, and he could have had the uninterrupted compound interest that he was looking for. But he didn't do that, so it's too late, and now we have to wait until he's got some cash flow coming in to get started. Not the end of the world, but we have to wait. The other thing that was very interesting about this particular gentleman is that he's in his 50s. He worked for a glass company in the 80s. This glass company, he said it was a big deal, glass fiber optics. And every month he said that the stock of the company was splitting. When he left that company, because it was going to be bought out, something was happening and he foresaw the end coming. So when he left with a $500,000 of stock and investments. They said when he left, he had 24 hours to move it. So he moved it to the new company, which was an airline, because he went to work for an airline. When 9/11 hit, guess how much money he had left? $8,000. We went from $500,000 to $8,000. Now that is my side of the story, right? But so many people ask me, Mary Jo, are these life insurance companies backed by anything? Are there any guarantees? Are there any guarantees in the market? Why did you ask your financial advisor that? Did you ask your broker that? Where are the guarantees? What happens if the market crashes? Why are you holding my companies to a different standard? Why are you asking harder questions of me than you're asking of them? I absolutely do not mind answering those questions, but be fair to yourself and say, okay, if that could happen to this gentleman, where is that backing? Why are we accepting that as normal, as okay? Because I don't think it's okay, nor do I think it's normal. It's just gambling, and I don't gamble. So that's not okay to me. All right. Hey, Craig. How is Illinois? Hey, Brooklyn. I don't know where you're at in Colorado, but my aunt is there and she got snow. Central Wisconsin, reading your book. Awesome, Samantha. Oregon, ordering the book soon. Hope you're not burning. Another Wisconsin. Read and listened. Austin, Central Wisconsin. Sorry, guys. Hey, Heidi. Hi, Maria. Hey, Adam. Hey, Shane. Shane, you can go to farmingwithoutthebank.com and you can get the book there. If one of my awesome listeners wants to just type that in the comments, www.farmingwithoutthebank.com, that is where you can go get it, Shane. Central Illinois, and yes, the book is a big eye-opener, a little hard to wrap my head around the concept. Yep, Adam, it is sometimes a little bit hard to wrap your head around the concept, but as my wonderful client Nate said, it's easy when you quit making it so hard. I might put that on a t-shirt. I love it. I love it. Okay, next guy we met with, he has a hog operation. And this was pretty interesting. He has like his bank, I have never heard of this before, but his bank put him in the nastiest loan I have ever seen. And they are now today saying, oh yeah, that probably wasn't such a good idea. So if he pays it off, his interest rate's like 7.5 to 7.75% interest. He wasn't exactly sure. Holy moly, on a hog barn. Like I said, why is it so high? Oh, because we got some loan with some investors in it, and he was explaining it to me. And so the rate that they got the loan, whatever, there's this 5% rate. If he cancels this, or if he pays this loan off early, or if he refis this loan, guess what? He has to pay the difference between 5 to 7.5 or 7.75, whatever it is. He has to pay that penalty. He has to pay the interest unless the interest rates would go above 5%. Then he can get out without penalty. But the rates for this particular type of group that they compare it to, I forget the exact name of it right now, and I don't have it wrote down. But the rates have to go higher than 5. And then he can get out without penalty and they would pay him or something. It's absolutely crazy because when he took this loan a year and a half ago, the rate of this particular London thing that they look at was 5%. Today it is 0.5%. Changes every day. Horrible, horrible loan that he's kind of stuck in. And he's got to watch this rate every day to make sure that he can get out. Like, absolutely crazy. And so it was frustrating. And he's not in a bad position. He's still making money. Everything is good. But don't always trust your bank to have your back. They are not bad people, okay? People beat up on me all the time. Mary Jo, you're so mean to the banks. We need them. Yes, we do. They should be plan B, not plan A. There are some good loan officers. There are some bad loan officers. There are some good banks. There are some bad banks. I am not saying that they're bad. I'm just saying we don't need them to be plan A. But not all banks have our back. Not all lenders have our back. So please understand what you're getting into. And I've seen this a couple of times now, where if we pay off a loan early, we have this massive penalty. Always make sure that when you take a loan, can you pay it off early? Because if we're going to have a huge penalty, do we want to put ourselves in that position? We don't know what the future holds. It can be great. So let's prepare that, oh yes, awesome, we could pay it off early. If we can't, we can't, don't worry about it. But if we can, why would we want to have this huge penalty? That was icky. This guy was so, he had really done his homework about infinite banking. He had read Nelson's book, he read my book, he listened to my podcast, and his current insurance company has him in a variable universal life. He's got $20,000 of cash value, and his wife has $20,000 of cash value. And this is what's interesting. They're in year 10 of these variable universal lives. They have a 10-year surrender period. What does that mean? That means in a universal life, in a variable life, and in an indexed, okay? There's 3 different types of these market-driven type products. In these products, there are surrender charges. Those charges do not exist in a whole life policy. So there are surrender charges. They're usually 10, 15, sometimes 20 years. What that means is if you cancel it, you don't get all your cash value. You only get the surrender value, okay? So they're in year 10. Surrender value in this policy is done. They're going to get all of their cash value. So their local agent who sold them these VULs is saying, oh, we've got a great product that's guaranteed, a universal life, okay? Universal life has a guaranteed rate, but they do not have a guaranteed fee. They have charges. They have all these other things still in the policy that can turn it backwards even with the guarantee. So I don't want to get into super detail here. I'll be talking all night on universal life. However, they said, oh, this is fantastic. We can 1035 that $20,000 from a variable universal to a universal where there are guarantees. So what they want to do is they want to cancel the variable universal. He's all done paying surrender charges. And they want to move that money into a new policy, a universal life, and start over with the surrender charges because there's a guarantee in that policy. Still no guarantee that it's going to go to age 121 because the fees and charges are going to go up all the time. No guarantee those are going to stay the same. What? Just about the time that thing starts, you start getting access to all the money. Well, let's start over with a better policy that has a guaranteed rate, but no guarantees on the fees. Oh my God. You know, just when I think I hear it all, then I hear something else genius that comes along. Really? Well, I'm like, why would you do that? And he said, I'm not going to because it sounds awful. All of the products he's trying to sell me are not any better than what we have. And then he said, oh, I've got this book, Farming Without the Bank and Becoming Your Own Banker. And have you heard of this? And then the agent says, oh, yes, yes. I am now an independent agent. And so I can now write whole life. I said, well, that's funny because this company sells whole life, even if he's not an independent agent. He could have been writing whole life the whole time, but he decided not to. And they're not a mutual company, so you're not going to get the dividend. So then he continues his research and he comes upon another agent who is not certified infinite banking practitioner, but he understands the concept, right? I know the guy, great guy, love him, but not certified. And so he teaches kind of infinite banking, not 100% hardcore infinite banking, but kind of infinite banking. And I also know the guy doesn't know anything about farming at all, does not live in a farming community, may not have ever, I'm not going to judge him a whole lot. Super sweet guy. I absolutely love him, but doesn't know anything about farming, right? And so he had asked him, he had a meeting with him, and they talked about an hour. And what did this other agent do? Just shot him over some illustrations. We had an hour and a half meeting. We went through all of his finances. In an hour and a half, I ran some illustrations and we had strategies. And I said, and did those strategies come from anybody else? No, they just sent over the illustrations. We never even talked numbers. How can we do any kind of strategies when we don't know what's going on with you financially? And for agents that don't understand farming, how can they set a premium when they don't have the flexibility? Because the other company, that the other agent who understands banking, the other agent was writing him with companies that didn't have the same flexibility as my companies. And so if you don't have that same flexibility, what happens when you have 5, 6, 7 years of bad income and we have to reduce the premium and you can't go back up? You can, now it's done. If you go down, it's done. What happens then? We need to have that flexibility. We need to understand farming. We need to understand infinite banking. We need to understand how our policies work and which companies. Okay, that is huge. That's one big circle. And so again, I don't know if he's going to be a client. I don't push anybody. People get to decide what they want to do and if they want to work with me. But it was a little bit disheartening that he has talked to two different agents and neither one of them can help or even tried to do what I did as far as sit down and go through all those numbers. You might not want to sit with me for an hour and a half and go through those numbers, but I can't help you without. I just can't. I would be doing you a disservice by giving you advice and not having information. Somebody on Facebook has been hammering me this week. What companies do you write with? What companies do you write with? And I said, a mutual company. There are a number of mutual companies you can write with. Well, which are your top 3? Doesn't matter what my top 3 are. What matters is that the agent understands infinite banking. If the agent doesn't understand infinite banking, you can have a policy with a company that doesn't mean anything, which leads us into another client that I had this week. So I get into this meeting and they had a policy with a company that I write with, okay? And I said, oh, that's a really good policy. And they said, yep, we read Nelson Nash's Becoming Your Own Banker book, and we wanted a whole life policy like this. So we took it to our local agent and he said, oh, I write with this company. They're going to be able to give us that policy. And I knew exactly what was going to happen because this company does not structure policies the way I do, even though they can. Home office does not understand their own product. Sad, but true. In most cases, they don't understand their own product. And this company in particular is okay, but when I called for help, they said, Mary Jo, we can't do that. And I said, well, forget about it. I'll figure it out on my own. And I played with their software long enough that I was able to get what I wanted, but they have no idea how I do it. I just submit everything and they submit it. Nobody ever looks at it to say, oh, what did she do? How did she do that? Nope, I can do it because the software lets me do it. I'm not manipulating anything. I just know what numbers I need to put where. So I said, well, how much money do you have going to the death benefit? How much do you have going to cash value? Well, yep, they set it up so it's going to grow a little slower. Not horrible at all. Not horrible at all. And I said, okay, that's great. They could put another $10,000 towards cash value every year. And they said, but gosh, COVID really hit us hard. And I lost a lot of clients because this guy, they farm a little bit on the side, but he has a consulting business. And he said, I lost a lot of clients, so I'm not going to be able to put all that money in right away. And I said, okay, that's fine. Well, go ahead and make sure. I said, this is what happens with this company. You can pay a minimum of $120 to cash value per year, but it have a 3-year rolling average. You have to put that 10,000 in over the next 3 years. If you don't, after 3 years, you can't put it in anymore. Guess who didn't tell him that? The agent, who did not know how to structure the policy. So he went to home office and had the CEO or something, or vice president of something or another, construct the policy. But he didn't know how the actual paid up additions works with that company. And so they're like, what? And I said, okay, this is what we need to do. And again, we looked at their numbers. When business comes back, we need to be filling that up, because remember, we can turn around 30 days later, borrow against it. With this particular company, we have to wait 30 days. And they were like, oh, okay. And then we went over some other strategies of what to do with extra money that they have coming in, and if they want to build some vacation rental stuff, and if they want to do some other things. We had a wonderful hour-and-a-half meeting, and it is rare. It is very, very rare for me to take on clients for free, because I do not get paid to help people that already have policies. But they did not know about me until after they already had these policies. They read Nelson's book, and then they read my book. And so I'm not going to just leave them out there. Like, they're super, super, super awesome people. They have already been telling all kinds of people about me. And so I said, we can just put me on as a servicing agent, and I will help you through this. When we need new policies, we'll construct them right. But going forward, let's help you understand how to use them, because now you have them. They have Nelson's book, but it's not a how-to book, right? It's really just the start. My book is not how-to. We need to know what's going on with their operation, with their household, to really understand. And so, again, not often, please. I am making a huge exception because I don't have a ton of time to help people for free, but they were so awesome. And I just don't want them out there hanging because they have a good policy. But again, a great testament to why you want to have an agent that understands farming, that understands the companies. Not every company's paid up additions works the same. Some companies are more flexible than others. That is so important to get all of the information. All right. Oh, you guys, you're so awesome. You have lots of information coming in. Jenny, you are fabulous. Every week you help me out. I appreciate that. Jenny posted the link to the book. So it's in the comments. Thank you, Jenny. Hello, Stephen John. Let's see. I'm gonna scroll through comments here real quick. Jared, what would a $7 million policy for business startup in 5 to 7 years look like? I don't know. You got to talk to me. Got to have a meeting. Talking cash value, talking death benefit. If you don't have the book, I encourage you to get the book. It's got numbers in it. Those numbers are all relative, you guys. So if you are looking at a policy and you're saying, well, how much cash value will I have in 7 years if I put 100,000 in? It's in there. What about 50,000? Just divide that one in half. All the numbers are going to be relative. Working on getting the wife on board. There's always one, Jared. There's always one. Yep. I encourage you just to see if she'll listen to the podcast, and that might help a little bit. That seems to help if people will listen to the podcast. Um, how much would I need to fund a policy to pay up to a $100,000 loan in the bank at 7%? Sylvia, again, we need to talk, hon. I don't know. I don't know what else you have going on. Hey, Shailene. You two need to get family on board. We need to have an on board Facebook live. Hey, Shane, Louisiana. Woohoo! Didn't you just ask how to get it up above? Yeah, you did. You're awesome, Shane. Okay, hey, Nikki. All right, let's keep going. All right, then I had another wonderful lady whose husband is not really on board either. But guess what? She made an appointment because sometimes that helps to have a little more information so that you can take that back to the spouse that's not on board. And you can kind of explain to them what's going on, and or they can just sit in the meeting. If they're willing to just sit in the meeting, a lot of times it's because they don't trust me. I'm some crazy lady from the internet, and so why would you trust her with your money, right? And they just need to know that I'm real. And this is what I find a lot of times is that some people are like ready to go and they're like, oh my God, this is awesome. Let's put in like $1 million. And the spouse is freaking out because they haven't read the book. They think I'm crazy. They think the concept is crazy. Everybody they talk to is crazy, right? And then we get into the meeting and I'm like, no. You can't do $1 million. Rein it in. Let's start small. Let's start where it's comfortable. And then we can get going and we can start more than one policy. And at that point, the spouse is like, I like her. Because I am not going to let you guys put all this money in if you don't have the money, right? It has to make sense. The point is to create wealth, not lose it. So I'm really going to kind of rein you back. And a lot of times the spouse that's not on board is because they really truly think I'm just a life insurance salesman and I'm just going to take you for all you'll give me. And that is so not the fact. So this lady's husband was not in the meeting either. She does most of the finances, so he didn't really need to be. But they have a 5,800 head dairy. 5,800. Huge, massive. And it was exciting conversation because her and her husband started from scratch. They did not get anything. They actually bought mom and dad's operation after they had already started theirs. They bought a neighbor's operation, which is a super awesome story. So dad's operation, they bought contract for deed over, I think it's 15 years, and they're getting to the point where they're at the end of that 15 years. Another neighbor also did a contract for deed, and she said that they bought that from him when he was 80. And they could not pay that loan off. This is how their contract for deed reads. They can't pay that loan off until he and his wife passes. Okay. They were 80. He just turned 101, and I think she said that the wife is 97 or something, and they still live at home alone. And so they're not paying that. They, at 80, they probably thought, well, we'll be able to pay this off early, or the other option is they can pay it off when both of them pass, or they continue to pay the estate. Who knows, at this rate, they might outlive them, right? So another testament also to the fact that our policies are now going to 121 years old. Why? Because people are outliving their old policies. Let's just use this gentleman as an example. If he had a policy, a whole life policy that went to age 100, guess what? It paid him out. When death benefit and cash value equal each other at age 100, you get that paid out to you. Now it's 121 because people are anticipated to live longer. Okay. All right, so they've got this dairy. They've built it all on their own. Over time, they've grown kind of fast, and the local bank allowed them to do that until the local bank got in a little bit of trouble from the FDIC. And so they kind of got their hands slapped a little bit. These guys had to go to a different lender. When they went to a different lender, now keep in mind, I believe they're operating, if I am correct, their operating was close to like, it was like multi-millions, like 15 million or something, okay? This particular lender is having a hissy fit over $200,000. They are operating with millions of dollars, and the majority of that operation is cash. Millions of dollars. They have a small line of credit to operate on. And this particular lender is worried about a couple $100,000. And so she was like, how do I get rid of them? Right? Well, we can get rid of them. We have some rental properties. So do we have some equity in those rental properties that we can do a 30-year mortgage, take that cash out and just get rid of these guys? And so sometimes it's okay to do something like that and pay those off early if we can, just to get rid of whoever is being a pain in the butt. Now, I have some other clients that we just recently did that on as well. They had a large amount of cash come in, and guess what? They wanted to pay off 2 banks that I would have not paid off right away. I'm like, no, don't pay off those loans. If we pay off these loans, we have more cash flow. They said, I don't care. This bank is ridiculous to deal with, and I want them gone. So gone they were. And sometimes that is what matters. So that is something that's one strategy that we used for her. But they're going to have a ton. They've grown to capacity. They cannot get any larger. They are where they're going to be. And so in the next 3 to 8 years, oh my gosh, they're going to have so many other loans complete and done that they are going to, every time a loan is done, they can start a new policy, right? If I pay in a $34,000 a month loan, if I'm paying $34,000 a month, I can now start a policy with $34,000 a month because it was going somewhere. And then maybe I got another $20,000 a month policy gone. I can pay that and that's 3-4 years later. I can start another policy. And then maybe it's another loan that was X amount per month, right? Because their operation isn't going to get smaller. It's going to continue to get larger. But they had a disease or something go through, massive deaths for cows, massive amount of cows they lost. That hurt them and set them back to the point where then the bank, of course, gets a little bit worried, right? So obviously a juggling act, but so awesome. They are doing so, of course she feels like they have no money because anybody that operates on cash, you still don't have any money. It's not like you're sleeping in a pool of cash. You just put it right back in. But you're not borrowing every red cent to operate, and that is a positive thing. All right, and they want to start doing some estate planning because they have a couple of the kids are going to want to take over possibly, and they know their exit strategy is going to be in 15 years. And so they want to make sure that they have some death benefit to keep that going, because she has read the generational wealth blog on my website. So she did her homework as well. Most people do not go to my website and read my blog posts, and she did that and she understood that, and that was a big deal. Then I talked to this was a younger couple in their 30s, and he's farming most of dad's stuff, and he's trying to do regenerative ag on it. And so he's trying to plant some cover crops and those sort of things. And so they're in year 3, or they've done 2 years, they're going into year 3, And so they're not exactly making a lot of money right now. And guess what? The wife is nervous. She's like, I just want some steady income. This is not good. How much longer can we lose money? And so he's like, I think I'm just not real sure. And we went over his numbers and then it all comes out. I'm not sure that I want to continue to work with dad. That's not going well. He doesn't like the cover crops, but I don't want to lose the land. Um, but I can go work for another family member and I can maybe take over that business or at least get paid more and make some income. And then what do? Do I sharecrop what I have? Or do I have it custom farmed? What do I do? And I'm like, well, why don't you just sublease it? Like all those things are awesome. You can sharecrop it. You still have expenses and risk. You can have it custom farmed. You still have expenses and risk. Or if dad's okay, you can sublease it. No expenses, no risk, as long as you find someone to put the kind of cover crops in you want and is doing some regenerative ag as well. Well, guess what? Now you don't have the risk, but you still have the land if you want to go work for this other family member for 5-10 years and then come back. And if the guy that's renting it understands that, we shouldn't have an issue, right? But a way for him to make some money, make sure that the wife is relaxed and understanding everything, but don't lose what he's already built. Because it takes a long time to get that ground where it needs to be, and not everything has been moved over into cover crops, and there's a lot of soil issues yet that he has to deal with because dad hasn't been doing a good job with it. So with that one, it was just a matter of we kind of need to have a little more money coming in to start. So maybe now wasn't the best time. 6 months to a year from now, hopefully we can change that and start something really small and just get that going, or we just start some convertible term that we can convert down the road. Okay, next one. Wonderful lady. All my clients are wonderful, let's be honest. Wonderful lady that was also very stressed out, and spouses. I'm not going to just say husbands because I see it in both sides, but typically it's the wives that are stressed because usually in most circumstances, the wife is either doing the numbers. Okay, this is typically what I see. The wife is doing the numbers and she knows what the bills are and she knows what's getting paid and what you have and don't have money for. Or the husband does the numbers and he doesn't share them with the wife. So she doesn't know what's even going on. And then she's stressed about that. So this particular couple, he had an off the farm job that paid a buco amount of money. COVID comes, wipes it out, right? So what was keeping the ranch going? The off the farm job. What was keeping his expensive hobby going? The off the farm job. Now there's no off the farm job. Income got cut to 1/3 of what they are used to. No, I'm sorry, 1/4 of what they are used to. So how are we going to buy hay? Because we need to buy hay this year. It's dry. There's no grass. But we can barely make the heifer payment because we're buying bred heifers. So we can barely make that bred heifer loan payment. What are we going to do? Because he cashed out his IRA and did what? Stuck it into the hobby. Because he works 24/7 and wants a little bit of relief. So he wants the hobby. I get it. That's where he stuck the money. But she is over here freaking out about the loans they have. And she said, we still have X amount of dollars left on my pickup. That's ridiculous. And his response was, that's it? Man, we had a heck of a lot more. That is such a positive response. I can't even be mad at him about that, right? Because he's looking at the positive side of it. But if he doesn't know the numbers and he's not paying attention to the numbers, and he's clearly not paying attention to her and her facial reactions, because I could see it in the meeting that she was stressed. And so they have some money in investments. They're going to be short. They're not going to be able to make their payments. There's how, right? Because she's homeschooling because the kids are having to wear masks at school and it's a disaster. And so she's homeschooling, she's not working, his job got cut. So what do? Well, all they need is cash flow. All they need is a little less cash flow. So how about we have money sitting in different pools, some investments, some savings, some CDs, other things, right? So we've got this money sitting there. She has some cash value from a policy that her mom and dad started on her. So I'm like, okay, between these three things, we have enough to pay about 85% of that heifer note. So let's get that paid off, reduce your payment. And if we're going to borrow $70,000 from ourselves, if we've got $70,000 sitting in all these other things we did not think about, can we take that 70, pay off the bred heifer note, and then you are going to pay that back to yourself? It was retirement. You are not taking from retirement. He already cashed out one retirement. So between all of this, we're at like $110,000 or something like that. And I said, okay, so I want you to pay yourself back for that $10,000 a year into a policy over the next 10 to 11 years. So now we've borrowed 110, we've paid back ourselves 110 in premium payment. That is where our policy is starting. That is our premium payment. If y'all are taking cash or cashing out IRAs, which it seems is the thing to do right now, because I have a ton of people doing it, not by my advice, but because they've already come to me. I had another couple this week. She had cashed out her IRA and it was just sitting there. It's just waiting for something to be done with it, but she is not keeping it in the market. She has had enough of that. But if we can do that, pay that off, give them a little bit of breathing room and pay it back, are they still going to have their money for retirement? Absolutely they are. In addition to having a little bit of death benefit for their kids, right? So it was wonderful, absolutely wonderful. She's been doing a great job. They've both been doing a great job. When the COVID thing all goes away and he goes back to his regular job, making a bunch of money, guess what? Now we have a place to put that. And we're going to have to figure out how to do it because he's in an industry that can just drop off like a hat. And so we have to make sure that we have the ability to go up and down there and we don't get overzealous and just go, I got to pull the reins back a little bit. Talked to another great guy who is farming he's got about 6,000 acres and 8 children. Okay. And guess who doesn't have any life insurance? His wife. I see this a lot. And I have quite a few clients that have a lot of kids, 5, 6, 8 plus kids, right? And who is not insured? Mom. The client that I talked about earlier that had life insurance with the other company that wanted to move it to a UL, his wife didn't have hardly anything either. And he said, well, that agent said that it's probably more important to put life insurance on me. If you have, and this guy didn't say that, but 8 kids and no insurance on your wife, if something happens to her, do you think you're going to be able to go to the field, go out, feed cows? You have kids to take care of. You have kids to get to school, to get to activities, to emotionally and physically take care of when mom passes away. Oh my goodness, is she important? And do you need some life insurance on her? Because if she passes away, You're going to need that money to find a farmer to go feed your cows and harvest and seed and do whatever it is you need to do, because it is going to be a heck of a lot easier to find somebody to tend to your ground than raise your children, right? So yes, mom is as important, if not more important, because she is keeping everything going inside, or whoever is keeping everything going inside. I have some clients who dad is inside and the wife is outside because she hates being in the house. Whatever works for you, I don't care. Whoever's in the house taking care of the kids is equally as important as the other person. Think about it. If they weren't there to take care of your children, who would? And do not tell me grandpa and grandma, because they could die tomorrow as well. Okay. This gentleman was operating 100% on cash. He didn't have any line of credit. He had a couple loans, but operating on cash. And so what are we going to do? Whatever he's buying with cash every year, we can start slowly moving that into a policy. If he's buying tractors, if he's buying four-wheelers, if he's buying fencing material, if he's buying balers, if he's buying combines, whatever, if he's buying a piece of equipment, we can move that into the policy, borrow against policy, and still buy that piece of equipment. If he wants to operate through the policy, we can slowly move over some of the profits, start building that cash value to then be able to borrow to operate with, okay? What we can't do is put $1 million into the policy, borrow $1 million and operate. No, that doesn't work. That does not work. We can't do that. And so we have to build slowly. We have to be a little bit patient. I already told you about them. I skipped ahead on my list. I had another great couple who, oh my, you guys, this is so funny. I love it when, and I appreciate it, but their camera didn't work on their computer. And she's like, I even did my hair today. She said, it's not often I'm not in a baseball cap. I even did my hair today, and now my camera's not working. So you guys, when you meet with me, guess what? You don't have to do your hair. I'm totally okay with that. Some people do, and I appreciate it. I love it. But believe me, if you guys did not expect me to look like this, and I don't even look very good at the moment, but if you did not expect me to have makeup on and earrings and look somewhat professional, I would be in a sweatshirt with no earrings and no makeup. So don't think that you have to get all dolled up for me, because you don't. But they were a great couple as well that started from scratch. And again, their off the farm job is supporting the farm. So we need to keep our numbers. We need to make sure we're looking at what is the farm doing, and if the farm's not making money, why? Do we continue to do that? Do we need to change something? What's going on? And they're in the very early stages. They're in like year 2, 3 of just buying the operate or just starting the farm. And so yes, that's going to happen. But catch that early on. What's going on? Why aren't we making money? And keep an eye on that so we don't have that cycle for 10 years, right? Because we're not working off the farm to keep the farm going. We're farming so we can hopefully quit working off the farm, right? So I talk about that every single week, and it seems to come up a lot. And again, this week, I've had a couple of those, right? Even the clients before where he had the really good off the farm paying job that then what? Was supporting the farm. I don't care if you're farming or you have a business, but if you have an off the farm, if you have a job that is paying you and you are using that money to supplement the business or supplement a farm or supplement whatever, if that cannot make its money on its own after it gets going, why do you keep doing it? If you're putting those capital investments in, make sure that they're getting paid back to you personally. I forgot to put the rest of my list of people that I talked to this week, so give me a sec. Do you guys have all your questions quit coming in? So I don't know if you quit asking or what, but let me know if you have any other questions. We might get done in an hour before an hour tonight. I did have one client that when we put money into the paid up additions, we need to put at least $120 a year there. And I had one client that has not done that since she started her policy, and she's like in year 3, and she needs to do that. And guess what? She forgot that we talked about it. And so again, if you are a client listening, your job is to call me, because my job is not to pester you. You need to call me. We will call you, but I offer to have an hour meeting. If you choose not to take my meetings, if you choose not to call me and you forget all the things we talked about, you're not being an honest banker. You're not being a good banker. We need to visit. And so thank goodness that we caught that, because if she doesn't put that 120 in, guess what? Now we can't put any money to cash value going forward. So that is your job. If you are not a client, yes, you're going to have to wait 5 to 6 weeks. I think my first appointment's the end of October is where I'm booking out to right now. And so, yes, you have to wait a long time to get that first appointment with me. But after you do that, and we're in the process of getting everything done, and once you start as a client, you have access to me whenever you want. I will call you back right away within 24 hours. I call all my clients back. If we need to have a strategy session within a couple days, you're going to get in to meet with me. You're not going to have to wait 6 weeks. So there's no reason to say, oh, Mary Jo, I just didn't know how this worked. No, that's not a good excuse, because you have to take the time to care. I can't care for you. Okay? We are so used to giving our money to a broker. We're so used to letting the bank tell us if we can, what we can do and where our finances are at. That's what we're used to doing. It's time to take back and do it ourselves, right? Hey, Gina. Woohoo, halfway. That's good. All right. I don't have anything else for you. So if you want the book, go to the link. Jenny was so awesome. She shared the website link, farmingwithoutthebank.com. You can go there, grab the book. I have it in audio as well. If you are not listening to the podcast, please go find your podcast app. If you don't listen to any podcast, you're crazy, because there are a ton of good podcasts out there. There's no reason to listen to talk radio, because they don't have any solutions. All they have are problems. And they just whine and moan and complain and don't give anybody any solutions to anything. And so if you want solutions, go find yourself some podcasts. Working Cows podcast, my podcast. You have, there's a lot of good ones. I've recommended them throughout my podcast. So while you're listening to mine, you can get those. Okay, if you guys want to be notified of lives, make sure that you click notification to get notifications. When you open this up, maybe it asks to get notifications. I don't know. But I did have one fine gentleman tell me that he did get notified, so that was good. I don't think that there is anything else tonight. I don't think so. So if you have questions, if you have concerns, if you have comments, Mary Jo at withoutthebank.com. Mary Jo, not Mary. Mary Jo at withoutthebank.com, and I will answer those. But otherwise, mark your calendars. Next Thursday, 8:30 Central Standard Time, we will be here again. And please, everybody in the fire areas, stay safe. Oh my gosh. It's crazy out there. Crazy, crazy. Somebody everywhere. We're always watching. We're like farmers. We're always watching the weather, except for our clients. Okay, everybody have a fantastic night, and we will see you next week.